What's up, guys? Welcome back to Forex and cryptocurrency. Today, I want to talk about price action, that is technical analysis, and I want to show you how you can place your support and resistance levels on your charts. Basically, price action is the price study of price movement over time, and here are some of the ways to place a support and resistance level. In your charts, you'll find charts looking like this, and like this. Here, charts like this are called ranging charts or consolidation. Basically, they mean that there is no trend. And charts like this means there is a trend. This is a bullish trend, and or an uptrend. You can find another one going downwards. That's called a bearish trend or a downward trend. Now you have to understand what support and resistance levels are before you can start placing them on your charts. And support and resistance area show you where to buy and sell. They are the crucial part or the vital part of every trader toolkit, and it is essential that you learn how to place them. Basically, this is a resistance level, and down here this is a support level. So what are support and resistance? Placing support and resistance area is the most important skill you can master as a trader, and placing them is easy. Support and resistance always divide your chart up into buy and also the sell areas. And area that sits above current price is the sell area, this area, and an area that sits below the current price is the buy area, that is this area. So basically, support is the buy area and resistance is the sell area. That's what you have to know. Here are some of the currency pairs that I use, which have tight spreads, but it doesn't mean that you cannot place support and resistance on other currency pairs. These are the most used currency pairs out there, and they are the pairs with the most tightest spreads that you can use. We have Euro USD, GBP USD, AUD USD, GBP AUD, AUD CAD, USD, GPY. They are not very volatile as compared to pairs like the XAU USD, that is the gold. And first of all, before placing the support and resistance area, you need to understand how the candlesticks works and the story that they tell. Basically, here the green candlestick here is called a bullish candlestick, and this red one is called a bearish candlestick. And they work in such a way that when it opens a wick at the top, and where the wick ends is the highest price that the candlestick reaches, and where it closed at the body is the closing price, that is the bullish candlestick. This is the opening area where the price opened, and this is the lowest price that it came to reach, and vice versa for the bearish candlestick. Here is a chart on how to explain how the support and resistance areas looks like. You have to identify at least two bounces in your chart for you to place a resistance and support level. You look at the previous how the previous markets looks like, and you have to identify at least two bounces. Like here you can see this is a resistance level. You have at least bounce one and another bounce here. That is the bounce two. That is where I placed my resistance level, and here you have another bounce one and another one here and another one there. That is how I placed the support area. You need to allow your charts to be neat and clean. You don't want your charts to look messed up. So your chart should be as simple and clear as this one. As you can see here, this was a chart I placed around 5 bounces that I could see. This was the highest bound at the market. We have another one there, and here we have a strong support area, and here was the lowest bounce. That was the lowest price at the market. So this was a downtrend chart, and when it reached at this point, the bulls or the buyers had more power, and it started going up to around there. So you have to put first of all, you need to put your support and resistance area at the highest and the lowest point of your charts before placing the middle support and resistance area. On this GBP USD chart below, you can see that the price is approaching an area at 1.3500. This is that area, and that is a strong area because of this bounce. The price reached here and it failed to break through, and it went down up to here and then went up to that resistance area. So when the price approaches the sell area, a large amount of sell orders are triggered. That means that the sellers place their sell orders at these points, so that they can take their profits. They are triggered, and as you can see, this usually results in price stalling or even turning around completely for a reversal. Why does this happen though? It's simple. The market movers like banks and hedge funds place their orders at the areas of support and resistance. That is this area and these areas. So here you can see a chart that is going on a downtrend position. That is the bearish move. And here is the resistance area and here is the support area. So when the price reached at this area, the buyers entered into a position to go upside. So you enter here after waiting for the confirmation of your candlestick, and you put your stop loss there and your targets at around there where the resistance level is. So this is another one. The buyers took a long position, and when it reached at the resistance level, this is the resistance level, now here the sellers were many in the market, and they started placing their sell orders at that point. So you enter your trade there, you enter your stop loss there, and you take your profit at around this support area, as you can see. Now here is a chart, an Australian dollar versus the US dollar chart, and I've identified some bounces. Here you can see a bounce and a bounce. Here you can see another bounce and a bounce. And here are some of the bounces, the greens and the red ones. So if it were you, where would you place your resistance and support areas? You need to understand. I told you need to look at least two bounces, and at least 2 or 3 bounces are enough. So this is what the chart would look like. You would have put your bounces here at this will be your resistance level, and this will be your support level, because we have more than 3 bounces, as you can see. Now here we have a chart, and I took a short position. So you short when the price cannot close above the resistance level, and the price was on a downtrend position, as you can see. And if you were to enter your trades here, you would have closed at your first target at this resistance level, because there is a support area here. This is a support area. Your first profit will be there before waiting for it to break through the support, so that it can become the new resistance level. Here you can see the price broke the support area, as you can see here, and it came and retested there, so that the price could continue going downward. Then after breaking and retesting, you take another entry there, you put your stop loss at around this point, and you take profit at your other support area. That's how you look at the market. And here is another, this was a support area, this was a resistance area. Down here was a support area, this is a resistance area. You can see that the price has broken through the level, which then acts as support. This was the resistance because of this point, and that point the price broke through and it came back and retested. As you can see, we have many wicks there, and then it moved to 140 pips move upwards, as you can see. and it became the new support. Here is another chart that shows you how to see this is a resistance level. These areas are the resistance levels, and down here is the support level. The price was going on an uptrend position, and now it broke. When it reached this point, it broke and it formed the new support and moved all the way up to there. As you can see, here is another one where you can see we had bounces there, more than 5 bounces, and here we had other bounces. So you put your resistance level there and your support level there, and as you can see in this chart, we can see that the price has stalled in 1.3070. This is at this point twice in the green. This is the green highlights. The next time it approaches the level, it pulls back again, and then again 2 more times in the yellow. Here you can see it reaches at this point and then goes up, reach here, goes up, reach here, go up, reach here, and then goes up, and then it came and reached here so that it could go up again. So why is that? It is because the market movers place their buy orders at this level. As you can see, they place their orders, the buyers, at this level, so that the price can go up, and that means the price reversed. And this happens all the time in the forex, in each forex pairs, and in every financial market for that matter. This is how the market works, and buy and sell orders are grouped together in the same general area, and when they are hit, we see the impact of price. Here are some of the 3 rules that you have to consider in placing your support and resistance areas. Rule 1 is that place areas on the body of the candle. No, the body is the most important than the wick. The more recent the bounce, the more important. Prioritize recent bounces over older bounces. You need at least 2 connecting bounces to place a support and resistance area. There are a few exceptions to this. The most common one being for points which are yearly or all-time highs and lows. When you spot a year or all-time high and low, you can place an area there if it has only one bounce. Now let's let's move to trading view so I can show you with another currency pair how you can place your support and resistance areas. This is trading view where you can do your analysis and look for Euro USD. Here it is. This is how it's supposed to look like. You have to identify your highest and your lowest points for you to take your trades. Here I'll advise you to switch from the candlesticks to the line graph so that you can identify your highest and your lowest points easily, and your bounces. So let's identify first of all our highest and lowest points, and I'll advise you to use the daily, the higher time frames for you to place your support and resistance levels. So let's first of all select our lowest point. Here it is. Here is our lowest point. So you can see there we have our lowest point here, and let's select our highest point again. We have our highest point there. That's where our highest point is. As you can see, it's a major resistance level. It's a very major resistance level because there's no price that has broken from there. Price has failed to break from here. This is a major resistance level, as you can see. Now we have to identify some couple of bounces. We have one, as I can see, we have one here, And as you can see, the price is on a downtrend position. Let's identify another one. Here we have another major resistance zone, and let's identify another one. Down here we have another zone, another major support and resistance. So we have placed 5 of them. As you can see, there was bounces here from the past events. We had bounces there and also here, and the price has been moving on a downtrend position. Let me show you guys so that you can see how you can enter your trades. The price started up here, up there, and it went down up to this position, and then there, and then it went again down up to that position, and then it retested again, and then it went down and broke the other resistance level without retesting, and then it went up to there. So here you can expect either the price to go down again, come and retest to this support area so that it can pick up liquidity and then go up and break that resistance zone, and then retest back to the resistance zone and then go up again, and then go up, retest, then go up. That's how to predict your markets. That's how to predict your markets. So that's how the trend looks like. And if you were to enter the trade here, you could have taken your first profit at around this support area, and then enter another trade there, take your profit there, then enter another one there, take your profits down here, and then enter another trade here after breaking, and then take your profit here. So here, that's how you can predict your future with support and resistance levels, how the price is. Here, when switching back to candlesticks, you can see that how the price was behaving. You can see how the price was behaving from when it started. It broke down, retested, then came here, broke down, retested, broke down even further, and then started to and then it picked up a position, a support level, where the buyers entered the market and it went up. So here it can either go down or break up, and go down. You have to select, but possibly it will go down first. That's how to predict your markets, and that's how to set up your support and resistance level. And watch our other videos to know more about forex trading. Don't forget to subscribe down below, and see you in the next one, guys.